Hello everyone. Well, the FOMC minutes were naturally the major event of the day yesterday. The market's response was confused, to say the least. Bond yields and the dollar initially soared as a headline suggested there was broad support for Chairman Bernanke's tapering timeline. Then they came back down after a more tempered interpretation from the Wall Street Journal. Then they moved higher again as the market finally decided that the minutes did, in fact, suggest that the Fed is on schedule to start tapering in September, so long as the data cooperates. It's all data dependent from here, which means more volatility every time a number comes out. Now, after the end of the day, the dollar rose across the board, gaining against all of the G10 currencies and all 15 emerging market currencies that we track. Gained particularly against the Noki and the Stocky in the G10. It had been gaining against those before during European trading as well. And in EM, it gained particularly against the Brazilian Real, South African Rand, and Mexican Peso. Now, I must say, this is the kind of trend that I had expected. I expect that the current Fed board will want to start tapering off quantitative easing before the end of Chairman Bernanke's term, so that the Fed is launched in that direction. Regardless of the fact that this is tapering, not ending quantitative easing, I expect that the shift in the focus of monetary policy to support the dollar. That's because the market believes that once tapering begins, each day of tapering is a day closer to the Fed raising rates. This regardless of how much the FOMC protests that the two decisions are totally separate. Over the long term, this should mean higher real U.S. interest rates and therefore a higher dollar. Well, today, China got the day's indicators off to a good start with a much better than expected HSBC market flash manufacturing PMI for August. It rose to 50.1 from 47.7 in July, far exceeding expectations and surprising the market by recovering above the 50 line. Now, Aussie dollar was already recovering a little bit when the news came out, and it received a further boost after this report, but only a minor boost, and the pair remains below where it was on Tuesday morning. From my point of view, the Aussie dollar's failure to recover on such a good number is proof to me of the negative sentiment towards Aussie right now. Perhaps because of the perceived willingness of the RBA to see a weaker currency. The currency's failure to rally more on such a good number just reinforces my bearish attitude towards the Australian dollar. Later today, France, Germany, and the EU as a whole announced their PMIs for both the manufacturing and service sector for August. The manufacturing PMIs are all expected to be above 50, showing that the Eurozone economy continues to expand. That could provide some support for the euro, especially if there's some interest in taking profits after yesterday's gains in the dollar. The only major U.S. indicator out today is the weekly jobless claims, which are expected to be up slightly at 330,000 versus 320,000 last week. But that would still leave the 4-week moving average lower at 328,000 versus 332,000, so no delay to the tapering express. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.